Hello, you are welcome again to lesson 6. In this lesson, we'll be looking at caution. What are some necessary cautions, the preventions, or what you have to look out for to enable our trade to have higher probability of playing out. So that's what we want to look at. You should have been familiar with this chart by now, with this type of chart formation. We are using this as an example whereby we want price to give us this type of structure, low, high, and then form a low. Then the low will take out the previous high point, and this is on the weekly. You can see this on the weekly time frame. Then once the situation whereby we will now come to the daily time frame, the corresponding day time frame, we can see at that point that price then give us our entry model candlestick formation. What we want here is to sell. When price give us the entry formation, we now place our sell order there, our sell limit order. We want price to come into that range and continue to sell. And you will notice as time goes on, or from back testing this type of strategy, you would observe that sometimes this zone fail. Why does it fail? There are some type of market you cannot explain. Even the most perfect type of market, it still fails. So therefore, nonetheless, there are some precautions you can put in place, some safeguarding techniques. All right, there's one thing in the market that is called zero sum game. Okay, that's the zero sum game. Now in this zero sum game, it's all about how the market is going to be moving, whereby it involves buyers and sellers. Okay, when the buyers are buying, the sellers are losing money, and when the sellers are selling, the buyers are losing money. So meaning that as one person wins, another person loses. And there are some things in the market that we as city traders, we may not be able to know. Like in the demand zone, it's all about telling us how many orders are there in that demand zone. Then in the supply zone, it's telling us how many orders are there in the supply zone, whereby we want price to be selling or one price to be buying. So since we cannot be able to determine the amount of orders that are there in the demand zone or in the supply zone, that is the reason for all this our trading strategy and the techniques we are using to trade. I hope you understand. So there are some things we can put in place to help us to safeguard our trade and make it more profitable. One of those things is to know that if we have this type of structure on the weekly, then coming to the daily time frame, we now see that the supply zone that has been formed for us to sell this trade, instead of the price to tap in after the supply zone has been formed, we want price to come back and tap into that supply zone and continue to sell. But we will notice that there are sometimes price will not tap into the supply zone that has been formed on the daily time frame. Now coming from the weekly to the daily, on the daily time frame, the supply zone is here already. Then we want it to be tapped immediately. But you will see that while on the weekly low, when price was coming, it was forming some series of pullback as a low, a day high, a day low, just like that, giving us a valid demand zone behind. So if price now come now, while it has given us our candlestick formation, but before it tap into this supply zone, it now tap into a demand zone. There's a possibility that this demand zone, although it's not in our strategy, price can use it. I hope you understand what I'm saying. Price can use this demand zone, even though it's not in our overall strategy of selling. It can use this demand zone as a point, as a leverage to invalidate this our supply zone. That's because our supply zone has not been tapped already. If our supply zone has been tapped already after it has been formed, then it now got tapped before it reaches this demand zone, we are not cancelling this trade, we'll be selling it continuously. But if the supply zone that has been formed was not tapped before price now tap into this demand zone, meaning that this demand zone, there's a possibility that the market is going to use it to invalidate this our selling. So therefore, this will not be a loss. So if we see this type of trading where the demand zone was first tapped before it tap into this selling zone, if you see that already, you should cancel this trade because the possibility of it playing out is now very, very low. So let's go to another example. So we'll see that in this market, this is from the daily time frame also, based on what happened on the weekly. In this zone, we see that the zone now has given us our perfect candlestick formation. Then it may be that when price tap into this demand zone, that is not in our strategy because we're not trying to buy, we're trying to sell. So therefore, we can now notice that before price now get back into this supply zone, it now fade this demand zone. So because this demand zone has failed, price has now come into this demand zone and fail it, and then it's now coming back into our major supply zone that we want price to come into. Then if we are in this trade already, we can leave it, that we expect that price is going to continue to sell because the indication here is this demand zone that price want to use to invalidate our trade. Luckily for us, it got invalidated that yes, this demand zone is not going to hold. So since this demand zone is not hold, our major plan of selling this market is going to continue to be valid. Okay, these are the cautions we have to put in place, then we can continue to sell this trade because this price that was coming from this demand zone, that price we want to use to invalidate this zone before, it did not work out. So therefore, the zone was cancelled out. That demand zone was cancelled out. Then our selling now is still remaining value. You can now continue to sell. You can see that in this other example, the zone was not cancelled. Price tap into that demand zone and then uses it to invalidate this our trade, making it a loss. But in this other one, price invalidate this demand zone, that this demand zone is not going to hold, meaning that our supply zone will continue to be valid, and then we can now sell this trade. All right, in another example, we can see, like I've said, if on the daily time frame now, where coming from the weekly, that our candlestick formation has been formed, we now see that price tap into the zone already before it went into this demand zone. We have nothing to worry about. This trade has a high probability of failing this demand zone and continue to go in our direction. So these are just like pictorial illustration. Now let's go to the real chart and see how this type of things can play out for us to take note as a precaution or caution for our trade to have a high possibility of playing out. Okay, let's use this market as an example. This is NZD JPY. Price has already given us our previous week high. All right, so with this is our previous week high. Then we have our previous week low. As such, let's see what price will do by the time we go to our daily time frame. So our daily time frame, now in this place, we'll be looking for our reversal candlestick formation. Okay, let's continue playing the chart and see if our reversal candlestick formation will come into place. Take note, we have not seen it yet. Okay, I've seen it. By the time we look at this point, we see that this was a high taken out, a low has been formed. Then let's look at this place. We are looking for our reversal candlestick formation. This is our reversal candlestick formation, right? On the daily time frame, we are met to sell this trade based on our strategy. Looking for just 1 to 3 raise to reward. Okay, this was our trade we are supposed to sell. But based on our strategy, we just came from, we can see that there's a demand zone here. Price already tapped it. Okay. There's another demand zone here. You can see it. So therefore, this is our zone that was formed that we want to sell this market. But before we sell this market, there was a demand zone. Price give another demand zone. Then this other candlestick theory that make our candlestick formation to be completed now tap into this already established demand zone 1, demand zone 2. So therefore, it has already invalidated this our signal, because there's a possibility that price will use this demand zone that is already an established demand zone. Price can use this demand zone now to invalidate this our trade. So if I in this trade I will see this type of signal before, there's no need for us to take this signal, because it has a possibility of it failing, because price will now be coming from an established demand zone. So therefore, taking this trade will be very risky. It may not go to our direction. If you are in this trade, if you see this type of signal, it is very advisable not to take it, because price may use this demand zone to invalidate this trade. The only time we could have taken this trade is when we are going to be waiting and see what price will do. If price come up, invalidate this whole demand zone 1, demand zone 2, price fail it, then we cannot expect that price will come back to this our supply zone and continue to sell. I hope you understand. So let's play it out and see what price will do. You can see price have now used this demand zone to fail our supply zone. I hope you understand the market now. This is one of the examples I'm talking about. Okay, let's take a look at another example. This on the monthly time frame. Then what we are supposed to do on the monthly, we mark out the previous month high, then previous month low. Then what we expect from the market. Let's go to the weekly and see what price will do on the weekly time frame. Okay, this on the weekly time frame, we see that this is a reversal candlestick on the weekly. All right, meaning this is a weak supply zone, so we expect price to tap into this zone on the weekly. I don't usually trade the weekly time frame on forex, so I will have to go to the corresponding lower time frame. So therefore, this on the weekly, we want price to tap into that zone. So now let's go to let's see what price will do. Okay, you can see on this place, this is the previous week high, right? Previous week high. Then we now have the previous week low. Previous week low. Now we can now go to the daily time frame to see what price will do in that range. Okay, go to the daily time frame. Let's see what price will do from that particular zone to see what price will do. Okay, we can see on this place, this our so in this place you can see that this is our reversal candlestick formation we want. Okay, we are looking to just 1 to 3 as usual. I want to 3 trade, but while that is happening, let us take note that this is a demand zone here. All right, a demand zone here, the demand zone. If price tap, we want price now to go back into this zone, tap into it and continue to sell. But now that this trade has not been activated, if the next candlestick now tap into this demand zone before tapping into this supply zone, we will no longer take the supply zone, we'll cancel it. I hope you understand. If the next daily candlestick that is going to form, if we tap into this demand zone without filling it, we are going to cancel out this our supply zone trade. Okay, so therefore, let's see what price will do. Okay, you can see it now. This demand zone, where the price was in this demand zone. Okay, I hope you can see that while price was in this demand zone, our trade on this supply zone will be cancelled already. It will be very logical for us to know that while price came into this demand zone over here, our supply zone trade that we want to sell this trade, we will have to cancel this trade. First of all, we have to cancel it. The only time we are going to activate it again is now that price has already invalidated this demand zone, that this demand zone is no longer valid. So therefore, this trade, meaning that we cannot activate this trade again for a sell, because we know that the demand zone that is supposed to push it up and make this trade, this supply zone not to work, it is now valid, that that demand zone can no longer work, is invalidated. So therefore, our supply zone is going to be the one that's going to work now and take out this trade to make it go our direction. Let's see how it went. We see this was a very beautiful trade, a trade of 1 to 3. So that is another example like I've shown you from the beginning of this lesson. Let's look at another one to finalize this lecture. Okay, let's take a look at the final example. We can see in this scenario that this was a previous month high that price has taken out. Previous week high, price has taken out. Then we now have previous week low. So therefore, we have this type of structure. We'll now go to the daily time frame and try to see what price might do. Another week high, and then week low. So let's go to the daily and see what price will do. Very good. We can see on this trade, price has given us our reversal candlestick formation on the daily, because the previous week high has been taken out. So that's our day supply zone. To make a reversal, we want to sell this trade just targeting 1 to 3. Okay, 1 to 3 trade. But we can see that after our candlestick has given us this confirmation, we can see over here that our supply zone is valid, yes, but we can also see at the downside here that this is a demand zone. So therefore, for this demand zone, let me play it out. Let me mark it out. This is a day demand zone, because the market is only looking for a way to invalidate any trade. So therefore, we don't want price to tap into this demand zone before it get to this supply zone. All we want right now is for price, these candlesticks, to go back into our supply zone and sell this trade accordingly. The only time we are not going to we will cancel this trade is when the next type of candlestick that will now form get into this zone and want to come back to our supply zone. We are not going to take this trade again. We will cancel this trade. Okay, that's if the next candlestick tap into this demand zone, because price can use this demand zone to invalidate everything in this supply zone area here. Okay, so but the only time this zone now will be valid is when the next candlesticks, everything that will form, we come and tap into this supply zone. Then we can confidently be selling this trade without bothering whether this demand zone will hold or not. If this demand zone get tapped after we have been tapped on the supply zone, if it is even coming up, there's nothing to be afraid of. There's a possibility that it's going to come down and give us our 1 to 3. So let's play this trade and see how it plays out. You see now, you see what's happening over here. The next candlestick that was forming has now been tapped into our supply zone. When that happened, you can see that now the demand zone is not tapped. Many people that doesn't know this caution I'm showing over here, they will be afraid that there's a possibility that this demand zone will now move this market to go and take us out. No, we have to be confident that this supply zone already has been giving us the signal that yes, it is valid, and this supply zone, we have to take out this demand zone and continue to sell. Just like the way that it is just like the same way that we will expect that if this demand zone was the first one that was tapped, this demand zone will have the possibility of taking out this supply zone. Now that it is this supply zone that was tapped, which is in correlation with our strategy where the previous week I was taken out, we now have a candlestick formation, and then it was this supply zone that was first tapped before it's now tapped into this demand zone. This supply zone will have the energy and everything to take out this demand zone. So let's see how everything plays out. Okay, you can see it was a very massive trade of winning 1 to 3. I hope this is very helpful. You can backtest this strategy. I'm telling you, they are all for free on the monthly, weekly, and daily on TradingView. Hopefully TradingView will keep this particular pattern like this, that we can be able to make feedback testing on the weekly, monthly, and daily. So this is the end of today's lecture on caution. I hope as you practice this, trade it, you will come up successful with your trading. Have a great time. Bye.